Good day, everyone. It is an honor to present today. I will be discussing a study on the CSA 300 stock index futures price fluctuation risk management, which is a vital area in the context of China financial markets. This study focuses on quantifying risk associated with price fluctuation and offers effective strategies for market risk management. Today, I will mainly be responsible for explaining the first two parts. Background and objectives. The CSA 300 stock index future represents one of the most significant financial derivatives in the China markets. Due to its high volatility, effective risk management becomes crucial. The objectives of this study include quantifying the risk of price fluctuation using Gauss family models, validating the value at risk model for market risk assessment, proposing actionable recommendations to enhance market stability. This slide introduces the theoretical foundation for risk management. Risks are categorized into systemic risks, which affect entire market, and non-systemic risks, uh, specific to industries or individual stocks. To measure this risk, we use the VAR model for value at risk and the Gauss model to handle high volatilities and fat-tailed distribution effectively. Next, I will introduce the second part, deflection and methodology. The data cover 242 trading days from January to December 2024. We're collecting data from this website. Next, we process the data. In this section, we delve into the data processing and the statistic characteristics of the CSA 300 stock index future series. Please follow along as I explain the key findings in the detail. In the first part, we conducted the volatility analysis and examined the statistic characteristics of the data. You can look at the time series plot shows significant volatilities from September to October 2024, with relatively stable fluctuation in the first half of the year. This demonstrates a volatile clustering where periods of the high or low volatilities tend to persist. The series fluctuated around a horizontal line, indicating no clear trend. The histogram reveals a cutoff value of 14.21, indicating heavily tolls and a skewness of 1.663, showing a right-skewed distribution. The test statistics strongly reject the normality, confirming the series exhibits extreme value. In the second part, we conducted stationarity test. Using the ADF test, the new hypothesis of a unit root is rejected at all confidence levels, confirming the series is stationary and suitable for modeling. In the final part of data process is about autocorrelation and partial autocorrelation. Both AC and PAC polars show significant spike indicating strong autocorrelation. The result align with the price of the conditional characteristic, supporting the use of Gauss model. Thank you, and let's move on to the next section.
Part 3 is model construction and VAR calculation. But the arch test is carried out through testing. We find that p-values of arch first or second order test are all less than 0.05, which indicates that there is an arch effector. So we can build gauge models after comparing AIC, SIC, and HC values of arches first and second order test. We find that these three values of second order tests are smaller than those of first-order tests, which means that each second-order test is more effective. So Q equal to. Then we built gauge model according to AIC and SIC information criteria. From left to right, we can find that in gauge model system, AIC and SIC values are the smallest when P equals 3. This indicates that gauge 3-2 model can capture characteristics of written series of CSI 300 stack text future field and has the best fitting effect on the data. To further optimize the model, we built TGAT32 model. From right chart, we can find that compared with GAT32 model, AIC and SIC values of TGAT32 model are smaller, which indicates that this model has a better fitting effect on CSI 300 stock index future data sample. Also using PPT12 software to estimate its parameters, we can get mean equation and the variance equation. Next, the residue test is carried out on TGAT32 model. It can be seen from left chart. P-value is greater than 0.05, which means that there is no arch effector and the TGAT32 model is reasonable. Next is VAR calculation. We first built TGAT-M model, through which the degree of freedom calculated is 3.890,896. Then, using correlation method and conditional methods, variance of return rate in TGAT32 model, VAR value at 95% confidence level is calculated according to the formula. From the comparison results between VAR predicted value and the actual return rate, although the simulation effect is general, VAR predicted value covers the absolute value of the actual return rate to a certain extent. Finally, conclusion. In this report, CSI 300 stock index futures is taken as an example, and the characteristics of the written series of CSI 300 stock index futures are analyzed, and it is concluded that the return series has the distribution characteristics of peak to tail and a stable agglomeration. The TGAT32 model is selected according to AIC and SIC information criteria, and then the conditional variance in TGAT32 is used to estimate VAR value. The predicted VAR value largely covers the absolute value of the actual return rate of each trading day. So the usability, accuracy, and the operability of the model are verified, and the investors can prevent and control the investment risk of stock index future according to the value of VAR.